Hello everyone, I'm Dr. Stock. This video is for entertainment purposes only. Today I'd like to talk to you about 4 different companies. Some updates on some penny stocks that I happen to be a fan of. One is Senseonics, the other one is AVGR. Also CCIV, we had a little bit more news today. Also a little bit more confirmation, and I'll talk about that soon. And then finally we have NNDM, which also came out with a little bit of news today and helped out with a little bit of the price action that we saw in a bullish way. So stick around, let's get ready to rock. Welcome back. I'd like to recommend to you guys the Patreon if you'd like to come on over and check out what we got over there. I started a newsletter that I'm going to put out weekly about updates about the Patreon, things about the stock market, different features that I'm adding. It is a growing community. We have a private Discord over there. You can also be part of that. Talk stocks all day long, throughout the trading day, pre-market hours, after hours, over the weekend. It's a great community. Love to have you there. That link for the Patreon is down in the description. Also, if you need a trading platform, you can sign up for a Webull. By signing up, you now get 1 free stock. If you deposit $100, you get a 2nd free stock. And I also get 2 free stocks as part of the referral. The link for Webull is down in the description as well. Finally, subscribe, hit the like button, hit the notification bell, share it with your friends. Let's get on to the stocks. So Senseonics, the more I read about it, the more that I like the idea of their product, which is injecting under the skin a tiny sensor, that a continuous glucose monitor that patients with diabetes, the people with diabetes have, whether it's type 1 or type 2 diabetes, they can use it to track their glucose levels. It's supposed to be super efficient. It's supposed to be minimally invasive. I've read that one of the drawbacks is the battery life for the monitor that you set it over top of the skin. I believe it's called the SENS that they have. Right now, it's 90 days, it's 3 months, it's for adults, and right now, and it's also being covered by some insurances. They're working on extending that to 180 days and eventually to 365 days. I could really see something like that. 180 days, I think they really have a strong case for themselves. 365 days, I think would be wonderful. So if they can get up to that point, I think that we'll really see things take off, especially as they really get into greater market penetration. And it's a multi-billion-dollar market. I forget how much I read. I think Dexcom is the industry leader for continuous glucose monitors, and they're worth a lot of money. Senseonics is worth a little bit of money, and I really think with their subcutaneous product that they have, that they could tend to dip into that market a little bit more. So looking at their stock price, they're around like the 260 or 270 range. And I really think that they stand to go a lot higher as the years progress. Really, we want to watch for that 180-day approval and the 365-day approval. I think the longer that somebody could keep that subcutaneous implant, again, I believe it's called SENS, the longer that they could keep it in their skin, I think the greater of a chance that we have for greater market adoption and greater potential for their product. So keep an eye on it. I really think it's an interesting company. I think that they have a great product going for them, and the fact that they're already in European markets and that they're really working their way through the United States, I think that they'll leave penny stock territory within the next year to 2 years, especially pending the approval that they get and the progress that they have with their 180-day and 365-day products. Alright, the next stock that I have for you is AVGR. Again, one that I have a previous video on. I talked in a lot of depth about this company and the fact that I think that they really stand with their product, that they can take over the lead position for treating peripheral artery disease with the catheters that they have in their arsenal already. They're the only company that has the visualization technology, which is superior than all the others, for looking inside an artery while they go through and do the procedure to clear out any blockages due to plaque buildup that are in that artery. Their products, as much as I could read into it, easily compete with anything else that's out there. They pretty much cut out radiation almost entirely throughout the procedure, whereas it's something that the surgeons and the patients both have to be exposed to. For the patients, it's not as bad or as risky with the radiation. It's more on the surgeon's side. If they're the vascular surgeons, they're the ones who are exposed to that radiation every time that they do one of these procedures, clearing those blockages in the arteries. So not only is it a superior technology, but it's also safer, and I believe it's also more cost effective. But we'll have to fact check that one on me. But I believe without that radiation being there, I think it comes out to be just, you know, to me, it seems the more I read about it, the more it seems an all-around superior product. Especially their niche, it sounds like, is for CTO crossings, which is the most risky of the procedures. I think it's an atherectomy, which is what it's called, for clearing out that plaque buildup that's in there. The stock price today, when we take a look at it, they dropped when there was a $14.4 million capital raise. Devaluing the price, I think it hit down as low as, I think I saw it at like $1.47 or so, and now it's back up in the $1.50, $1.60 range. It's hitting a decent line of resistance right around that $1.68 mark. So that's something that we want to keep an eye on. It is holding its price though. Ever since it had its run up, it did go up over $2. There's that, it did dip below that for a while, but it didn't fall all the way back down. And I think they're positioned to capitalize with their products and services beginning this year and then really expanding throughout the next several years. Finally, CCIV. A rumor got going with there was significant volume during one of the after hours trading sessions recently, and then the next day we really saw that stock price jump up. I think it peaked over $35 a share. 35.18 I'm seeing as the high point for it. So that price held pretty well. We saw it drop down around the 33-ish mark or so, and then an article came out today that said that there's no news imminent between CCIV and Lucid Motors about talks of a merger. So with it not being imminent, that means that we have to wait longer. And as it goes with the SPACs, whenever investors hear that they have to wait longer for this deal to come to fruition, or some official news to come out that they actually plan to merge or do a reverse merger, it just, the stock cools off, the price settles, and that's what we saw today in the market, is that we saw that price settling because people's hopes got dashed that there would be a merger that would really be imminent, and now we're hearing that it's not imminent, and so that kind of puts some downward pressure on the stock price, and so that's what we're seeing. What it did say though, and it's interesting, if you take a look at the news on it, it says that CCIV and Lucid are in talks. Bloomberg News on January the 11th, I believe, is when there was something mentioned about CCIV and Lucid being in talks about a merger, but it didn't say that they had specific plans to merge. And then it got referred to again today in the news that came out about, you know, talks. But at this point, that's all it is talk. So to the best of my understanding from reading these articles is that they are talking. But there's always the Saudi Arabia side of things with the PIF, that where they have a large stake in Lucid already and talks about building a factory over in Saudi Arabia. The question comes up, does Lucid even need CCIV? And that doesn't really take them out of the running. The merger could still go through. It's something that we want to keep an eye on, though. As with any news that we have with something that, with a stock price like CCIV's, that's built up on rumor and speculation, anything that makes people doubt that is going to cause it to drop like we saw today. Anything that would confirm it or would be good evidence towards it or really fuel the fires for that rumor that a merger is going to happen at some point, those are things that are going to be catalysts that push it up. So in the Discord today, people were saying, should we sell it? Should we sell it? Is it time? One person said that they got stopped out. They're like, I still made my money, but they got stopped out around $30. And right now, in the after hours, it's reporting at $28.78. So they could buy back in below where they sold out, and they could still stand to, if they want to take the risk again, because it is a gamble, they could still take another position if they wanted to and really still be holding on for that ride up if that's what they choose to do. And if that's what you choose to do, you could do the same thing. Finally, NNDM. NNDM broke the $16 mark today as they're in talks with Carl Square about acquisitions. They're supposed to facilitate with the merger and acquisition process. So we already knew that NNDM was looking for companies to acquire or to merge with in order to expedite and facilitate their goals as a business. They also said that it would either be until after quarter two or maybe even all 4 quarters of 2021 until they really put their business into overdrive, working on expanding their reach and also expanding their capabilities through these mergers and acquisitions. So whether it would be their services or their inks or the Dragonfly 3D printers that they have, all of those things, this is very much still a building year for NNDM. And so anybody who would get in this time even though they're buying where there's fundamental value already included into the stock price, it still might be a value buy compared to what we would see either later this year as the pandemic fades or into 2022 as their business really starts to ramp up. So that's what I have for you today. 4 companies, the first 2, they are penny stocks, but they're companies with really good potential, and I could see a lot coming out of them going forward. Both of them in really good position for the niche markets that they would serve in order to make some really good penetration and really increase their earnings and turning it back out to the investors. CCIV, still no news of the merger yet. I mean, we did hear about talks, but as far as specific plans of CCIV and Lucid Motors merging, we still don't have that yet, and we're told today that, you know, there's no merger imminent, but that's not really coming directly from either one of those 2 companies. So until CCIV says, hey, you know what, it's not going to be right away, or until Lucid Motors says it's not going to be right away, we still even have to take the news that there's no merger imminent with a grain of salt. I've seen it before that we've gotten news from an outside source who says, don't expect anything anytime soon, and then next thing you know, much sooner than expected, there's an announcement made. I don't know if there'll be an announcement made. I'm just saying that sometimes it's a possibility, and if you are putting money into CCIV, you still stand a chance to lose it, but it's good to know that they're talking, so our money isn't totally out of place, even if it still is a gamble at this point. Finally, NNDM, they're still continuing their upward march, and I think that the stocks, the shares that I have remaining with them, are in somewhere around the sub $7 mark, and breaking 16 today was really nice to see, and I expect a lot more out of them throughout 2021, especially in year 2022. I think they're really going to catch their stride, and I feel like once they take off, I don't know how easy it'll be to catch them again. So if you're looking for an opportunity, you know, maybe do your due diligence, see what you think about NNDM. If you don't already have a position, see if it's something that you would like to take a position in. For me, I already have mine. I had it early on. My original one was around $4 a share, and I sold out of that one when it spiked up, fearing a capital raise, and so I sold out. I forget what it was at, something around $8 a share, and then I bought back in when it was just below 7, taking a new position with some of the proceeds that I got from that previous transaction. So that's what I have for you today. My Patreon, if you'd like to check it out, the link is down in the description. I'd love to see you over there. If you need that trading platform, the link is also down in the description for Webull. Sign up, get 1 free stock, deposit $100, get another free stock. I get 2 free stocks for the referral. It helps support this channel. Thank you ahead of time for that. Subscribe, hit the notification bell, hit the like button, share it with your friends. Thanks for watching this video. Remember, it is for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.